You ever see the financial news and feel like you're trying to crack a secret code? One day the NASDAQ is up, the next it's down, and it feels impossible to keep track. Well, today we're going to crack that code together. Let's get into it. You've seen a headline like this, right? And you just kind of scratch your head. It's like, what is the market even trying to say? It feels like it's sending completely mixed signals. But don't worry, by the end of this, we'll know exactly what's going on behind these numbers.
All right, first things first, let's start with the big one. What is the NASDAQ really? The simplest way to think about it, it's the main scorecard for the entire tech world.
So when people say the NASDAQ, what they're usually talking about is the NASDAQ Composite Index. And no, it's not a single company. It's this massive index that keeps tabs on over 3,000 different companies. The best way to picture it is just like this: one giant basket holding thousands of different stocks, all bundled together into one single score. Now, what's in that basket is what really makes the NASDAQ special. It is famously tech-heavy. Over half of its entire value comes from technology companies. We're talking about the absolute giants you know and use every single day, like Apple, Microsoft, and Google. Okay, so you've got this basket with thousands of companies. How on earth do they calculate that final score? It's definitely not just a simple average. There's a little more to it. It all comes down to this really important idea called market capitalization, or just market cap for short. All this is the total value of a company. You just take its stock price and multiply it by the number of shares out there. Basically, it's how we measure how big a company is. And here's a fantastic way to think about it. Imagine the NASDAQ is a classroom and it uses a weighted grading system. The scores of the biggest students, your Apples and your Microsofts, they count for way more. They have a huge impact on the final class average. So, what this means in the real world is that if Apple has a great day, the entire NASDAQ index can move up a lot. But if a much smaller tech company has an incredible day, the index might barely even notice. Seriously, the performance of just a handful of these giant companies can totally overshadow everything that's happening with the other 3,000 plus companies in the index. Now, the NASDAQ is just one character in a much bigger story. To really get the full picture, you've got to meet its two very famous siblings, the Dow Jones and the S&P 500.
I love this analogy. Thinking about these three is like checking the weather in different cities. The NASDAQ gives you the forecast for the super fast-paced world of tech, while the others are reporting on totally different parts of the economic landscape.
Let's give them some personalities, shall we? The NASDAQ, that's the energetic tech kid. It's all about growth, it moves really fast, and yeah, it can be a little volatile. Then you've got the Dow and the S&P 500. They're more like the seasoned veterans. They're broader, more stable, and they represent the big, established leaders of the whole economy. And here's how it all breaks down side by side. The NASDAQ, we know that one. Over 3,000 companies, mostly tech and growth, weighted by size. The S&P 500 tracks 500 of the biggest companies across all sectors, and it's also weighted by size. But the Dow is the odd one out. It only tracks 30 huge blue-chip companies, and it's price-weighted. That means a stock with a higher price has more say, no matter how big the company actually is. This unique detail is a huge reason why you can see the tech-heavy NASDAQ soar while the Dow barely moves.
Okay, so we've got the theory down. Now let's put it into practice. Let's see how all this knowledge actually helps us understand the financial news that everyone's buzzing about right now.
First up on the trending list, Palantir. You've probably been seeing this name pop up everywhere lately.
So what's the deal with Palantir? Well, it's a data analytics company that's become a massive player in the AI space. And because of that, its stock has been on an absolute tear, soaring something like 150% recently. All of this is fueled by the incredible hype around artificial intelligence. And as a major company listed on the NASDAQ, its huge gains directly help lift that whole index. Okay, next up we're doing a complete 180. We're shifting from high-tech to something, well, ancient. Gold. For centuries, gold has been seen as the ultimate safe haven investment. When investors get nervous about things like inflation or global uncertainty, they often run to gold for some stability. And that's exactly what's been happening. All that demand has pushed its price to near record highs. This is often a signal that money is moving out of riskier things, like some of those tech stocks that dominate the NASDAQ. And finally, let's jump from the old world straight into the new world, the cryptocurrency XRP. XRP is a cryptocurrency from the company Ripple. Now, it's been locked in this big legal fight with regulators for a while. But some really positive legal news came out recently, and boom, the price spiked, grabbing a ton of attention from investors.
So we have a booming AI stock, a classic safe haven metal, and a rebounding crypto. They seem completely separate, right? Nope, they are all pieces of the exact same puzzle. It's really all one big chain reaction. You see, when inflation starts to rise, central banks will often raise interest rates to cool the economy down. But those higher rates put a lot of pressure on growth-focused tech stocks, which can pull the whole NASDAQ down. And at the exact same time, all that uncertainty makes safe assets like gold look a whole lot more attractive. It really all boils down to this thing called market sentiment. And this quote sums it up perfectly. When confidence is high, people pile into tech stocks. When shaky, they look at gold. It's all about how people are feeling. So, after all that, what can we take away from these trends? What are the key lessons here? Let's wrap this up with a few important points. You know, when you see things trending, it is so easy to fall into a few classic traps, like chasing the hype because you have that fear of missing out, or FOMO, or putting all your eggs in one basket, or making emotional decisions, like panic selling when the market dips, and of course, focusing way too much on the daily noise instead of the long-term picture. Look, the hot stock of today is often forgotten by tomorrow. The economic climate is always going to shift. So the real question isn't about chasing the next big thing, it's about what you are going to do to prepare for whatever comes next.
If you enjoyed the video, subscribe, turn on the bell, leave a comment, and share it with someone who might benefit. Thank you for your support.